Okay, so hello everyone, good evening, and quickly confirm that everything is fine with my audio and my video. Good evening everyone. Just quickly confirm me that everything is fine with my audio and my video, that you can hear me properly and the screen is uh, visible to all of you. Just quickly give me a confirmation. Okay. Okay, thank you for the same. Thank you for the confirmation. So, okay, great. So before we start our session, let me tell you something about myself. My name is Davinder and I am your finance mentor. I used to take RBI 247 and discuss finance current affair news, which are very important for the SEBI's and the RBI's examination and other regulatory body examination. So in today's session, we are going to discuss these three news that is in front of you, right? So we are going to discuss these one by one. Let's just discuss our first news in a very simple way. The headline says that the RBI revises the risk weight. The risk weight for the NBFC's infrastructure loan. Now we all know that RBI is a regulatory body that looks after the non-banking system and the Indian banking system of the India, right? It has revised some risk weights. Now what are risk weights? Risk weights are some percentages that are being allotted to certain kind of loans. Now if these percentages increases, these weights increases, that means this particular bank have to set aside more money, more capital with themselves. Suppose let's take an example. There is an infrastructure loan that has been given by NBFCs. Now, as per the RBI regulatory norm, they have to keep 100% of the risk weight. That means if they have given 10 crore of loan, they have to set aside 10 crore as a risk weight, or we can say as a buffer. What if this whole loan becomes a non-performing asset for the bank? In that case, they have to have these buffers with them so that they can manage their day-to-day operations in a daily life, right? So this is the main agenda of these risk weights. Now in this guideline which is being given by the RBI, they are particularly talking about the infrastructure loans. Now infrastructure loans are very big loans. They are big loans and they are for a longer tenure. That means usually 10 years, 5 years, right? These are the main agenda. They involve a lot of money and are for longer period of time. Now these guidelines talk about these loans. Let's just read out through the PPT. It says they have given some amendments direction. The final amendment directions by the RBI has been issued with regarding to that. And what is the aim? Aim is to revise the risk weight which are related to the infrastructure loans. What is the agenda? Agenda is to improve the credit flow to the infrastructure loans. Now NBFC do generally avoid giving a lot of loans to these infrastructure loans, and I have told you that because that involves a lot of money for a longer period of time, and that does not motivates NBFC to invest their money in these infrastructure loans. And second point is these loans are very and highly risky, and that is the reason RBI thinks that why not we just introduce some directions which are helping the NBFC in giving more and more loans to these infrastructure loans, because infrastructure is again very important, we can say, part of the economy. Whatever directions has been issued by the RBI, they are going to be effective from April 1, 2026. I hope the overall agenda of the direction is being issued, has been understand by you. Let's just come to the loans. Like what kind of infrastructure loans that they are talking about, right? So particularly in this direction, they are talking about the high quality infrastructure loans. As the name tells you, they are talking about the high quality. That means good infrastructure projects. Okay. So they said which kind of project you will set to be a high quality infrastructure project. So there is a particular eligibility criteria for the same. If that criteria is being met, then we will call it as a high quality infrastructure project. Now what are these eligibility criteria? The project must have completed 1 year of operation. They have completed there. If they have completed 1 year of operation, right? The loan, whatever loan has been given to that particular project is a standard loan, Standard means good loan. It has not turned into a bad loan. A bad loan nahi hona chahiye NBFC ka. It should be a good loan or a standard loan. Then the project earns money through a government concession or a contract. If the project is being backed by the government, or the revenues or the cash flows are coming from the government department or a statutory authority, then we can say that this is a good infrastructure project because they are already backed by the government's revenue or the cash flows. So the bank as a lender knows that there is a predictable cash flows or predictable receipts that are going to come. So that is the reason they are considering these kind of projects as high quality infrastructure projects, right? Lastly, the borrower has enough money. They have enough money. They have enough money muscle in their hand in order to manage the working capital and the future fundings, so that they do not rely on any kind of another loan. Okay, so that is also a part of eligibility criteria. Let's just come to the risk weight, right? I'm skipping this slide for a while. Let's just talk about the risk weight. What kind of risk weight has been revised by the RBI in this case? So first one talks about that a high quality infrastructure project wherein 2% or more has been repaid by the borrower. If that is a project, then bank have to maintain only 75% of that project. Let's just take an example. Suppose they have given 100 crore of loan to a particular borrower, then in that case, if the project qualifies as high quality infrastructure project and 2% has been paid, then they have to maintain only 75% or 75 crore in that case, right? Let's just talk about the second thing. It says project qualifies as HQI, but it has paid more than 5%. 5% से ज़्यादा repaid हो चुका है loan. Then it is less riskier for the lender, less riskier for the NBFC particularly in this case. Then only 50% has to be maintained by the NBFC in this case. So this will help NBFC to free up more capital with them, so that they can give loans to another individual or institutions, right? The last line says that the project later fails to meet. Again, they are talking about even if the project has been classified as a high quality infrastructure loan, if in some cases later on that project becomes a failure, or we can say it is not now qualified as a high quality infrastructure project, in that case they again will make a higher risk weight as per the normal rule. That means they have to maintain 100% or more than of the risk weight, more than that of the risk weight as per the RBI regulation that are already there in the we can say the prerequisite guidelines. The last line says that existing loans facing higher risk weight under the new rules may continue to existing risk weight till next review or March 31, 2027. They are saying that suppose there was a loan and they were having the risk weight of 75%. But now as per this criteria or as per these guidelines, now that loan is no longer qualified for the 75% of the risk weight. In that case, they have to increase their risk weight to 100% as per this rule, So in that case, they are saying that this 100%, you can maintain it till 31st March 2027. Till then, you can continue to maintain it at 75%, but after this timeline, you have to increase it to 100% as per the rule. What is bad loan? So bad loan, see, we often call a bad loan as non-performing asset. What is asset for a bank? Whatever loan has been given by a bank to the individual or the institution, those are assets of the bank, because from those assets the bank is going to earn some percentages, which is a profit for the bank. Now if that asset becomes bad, if loan is not running good, that means the individual or the institution is not paying back money to the bank. In that case, that loan to that particular individual or institution becomes a bad loan. That means the bank is not earning any interest from these loans. That has completely become a bad loan. Okay, so there is very less chances that any kind of money will be recovered from such loans. So that is said to be a bad loan. Now we are coming to the so we are done with these, but there is one more regulation related to these. The one is lender protection is mandatory. We are discussing the first news, right? So in that news, there is one particular paragraph which is talking about the lender protection. That means We are talking about the NBFC. So they are increasing the power of NBFCs. Okay, they are saying that NBFC can now have more powers in the loan. The first one says the escrow account. Okay, this is the 3 rule that has been added for these NBFCs. What are these 3 rules? You can remember it by simple ruling, which is EPS. What E stand for? Escrow account. Escrow account क्या होता है? एक special account. It is a special account which has been held, or we can say controlled, by a third party. Now this third party is completely unbiased and it is neutral in nature. Okay, why this third party is handling this account? It is handling this account on behalf of these 2 parties. Okay, they have agreed that they have made some kind of agreement or contract. Okay, this third party ensures that whatever money is being released from this account is being released only when the terms and conditions are being met. When terms and conditions are being met by the borrower or the lender. Just take an example. Suppose this was an infrastructure project. You can see here, this was an infrastructure project. Now this infrastructure project have started earning revenue. Complete हो गया है. शायद ये एक रोड बन रहा था, ये एक इंफ्रास्ट्रक्चर प्रोजेक्ट था. अब यहाँ से टोल आने लग गया, रेवेन्यू आने लग गया टू द कंपनी, राइट? Now whatever money will be transferring to this particular account, which is escrow account, will first going to pay the EMI of the loan. Term and condition that is being signed under the contract, the first condition. Okay, then the second payment will be done for the operational expenses of the infrastructure project, in order to ensure that infrastructure project is running in a good way. And then whatever money is being left, then after that borrower can borrow the money from this, or we can say take the money out of this escrow account for their own use. So only borrower will be able to take those money from the special account only if these 2 first conditions are met by the borrower. So see, this is a escrow account. In this case, the lender, in this case, that is the NBFC, is getting ensured that they are getting their money first, and then the money is being used for other uses. Then comes परिपासु चार्जेस. परिपासु चार्जेस मीन इक्वल फुटिंग. इक्वल फुटिंग का क्या मतलब है? सम टाइम इन अ इंफ्रास्ट्रक्चर लोन, क्योंकि इंफ्रास्ट्रक्चर लोन बहुत बड़ा होता है, इट इज अ वेरी बिग लोन, एंड सम टाइम देयर इज मोर देन वन लेंडर दैट आर बीइंग इन्वॉल्व्ड इन अ लोन. Suppose there is a loan of 1500 crore, right? And there is one bank, there is another bank, there is one NBFCs, right? So they are saying whenever there is a recovery of loan, the money is being paid among these lenders. All lenders are considered to be equal. It is not like that you are giving priority to one single lender or one single bank. Okay, so all the NBFC will be treated equally, and they will be returned with their money proportionately as per their loan that is being provided to the project. So this is pari passu charge in this case. Step in right. The third rule is step in right. It says, suppose this was an infrastructure project, but now this infrastructure project is not running well. It has come on a position of a failure. It is not running in a well position. Now, this NBFC is saying that this infrastructure project can be revived if I just change the management, or I just change the staff, or I can make a little bit of the restructuring of this infrastructure project, and I can revive this infrastructure project in this case. This is a step in right. That means the NBFC have a power to step in to the project and again revive the project, so that they can earn the profit from that project, and they can, we can say, recover their loan, whatever loan has been given to that infrastructure project. I hope you have understand this EPS rule. So we are done with the first news. Now we are moving on with the second news. Okay, so the second news talk about the SEBI mandate certification for AIF compliance officer. Now in this whole headline, AIF is a major terminology that is being very important for you to understand. Now AIF stands for Alternative Investment Fund. ठीक है, इसे हम समझते हैं किस तरह से। हमारे पास म्यूचुअल फंड्स होते हैं, राइट? ऑल ऑफ यू मस्ट बी अवेयर ऑफ म्यूचुअल फंड. हाउ म्यूचुअल फंड्स वर्क? In mutual fund, the mutual fund company pools the money. They take a lot of money from various kind of, we can say, public investors. Okay, they take pool money from public investors, right? And then whatever money is being pooled, they invest that money in, say, equity, say in debentures, say in bonds, right? This is how things work. Similarly, in the alternative investment fund, the alternative investment fund also pools money and collects money from a different kind of investors. We call it as sophisticated investors because these are high net worth individuals. HNI stands for high net worth individuals. Why these are high net worth individuals? Because they have good money muscle. That means they have a lot of money with them and their risk appetite is also big. Okay, they are ready to take high risk, and they are, why? Because they seek high return. With the high return, you are taking high risk. Okay, who else is being involved in the AIF? Institutions. Any big institution who wants to invest or who wants to earn more return or have good money muscle with them can invest in such kind of funds. Now they do not just invest in equity, derivative and bonds. They invest in non-traditional assets. That means they do not just invest in traditional assets. They go for some other avenues, such as they invest in private equity. They invest in venture capital. That means they invest in startup companies because nobody wants to invest in startup company. Startup company is a very risky avenue. Nobody wants to invest in. But these are some individuals or these are some companies who wants to invest in such, we can say, companies because of they expect that in future this will give me high return. So such kind of avenues are being, we can say, selected by these individuals or institutions, right? So risk and return both are high, and what they offer, what this alternative investment fund offer, this offer a lot of diversification because this offers a lot of avenues wherein a person can invest in, but they are very less liquidate. That means, what do I mean when I say that it is very less liquidate? It means that a person who wants to sell is not going to get immediate money from selling those, we can say, assets or we can say any kind of funds. Why? Because in these kind of, we can say, market, people do not just invest very fastly because this involves a lot of money and that is very risky. And because of the risky part, they are not ready to sell or buy things very immediately. So if you want to cash, or we can say in cash, your entire investment today, it is going to be very difficult for you to in cash your entire investment today because it is not simply liquidate in nature. Now, this AIF are of three categories: category 1, category 2, category 3. Category 1 involves startup companies, small medium enterprises, new ventures, okay? And then category 2 involves unlisted companies and their equity funds. And category 3 involves complex strategies funds such as derivatives, futures, options. All these are involved in category 3. Now these are very complex and not very easy to understand for a general, we can say, publics, and that is the reason majority of we can say investment is being done by HNIs in the derivatives. Now what is the rule this news talks about? So basically they are saying that there is a particular person to manage these funds. Okay, these persons are being named as compliance officer. Earlier, this compliance officer do not require a certification, but now they require this certification. What is the name of such certification? It has been named it as NISM Series 3C Compliance Certification. Now this is a certification, or we can say an examination, that has to be given by this individual in order to do this job role. Okay, earlier this requirement was not there. Now they have added it. Now this examination is being held by NISM, that is National Institute of Securities Market, which is an educational institution which is being set up by the SEBI. Okay, now what timeline has been given for these individuals to comply with this ruling is January 1, 2027. What kind of job they do? Compliance officer. Compliance officers, as the name tells you, they ensure that everything is being complied. Okay, they are ensuring that whatever funds are being invested into, and they are following the rules and regulation that are being given by the SEBI. Let's just come to the third news, which says SEBI tightens the rule for merchant banker. Before we get into the news, it is very important for us to understand the merchant bankers. So let's just understand that. So who are merchant bankers? These are registered intermediaries, some kind of financial companies or individuals who ensure that they are helping the companies in raising funds from the IPO, or they are helping the company in any kind of consulting services. Okay, कंसल्टिंग सर्विसेज दे रहे हैं या तो फिर क्या दे रहे हैं, किसी ना किसी तरह की फंड रेजिंग में हेल्प कर रहे हैं. जैसे कि कोई कंपनी है, वो पहली बारी मार्केट से पैसा रेज करना चाह रही है, तो ये कंपनी उसे हेल्प करेगी इन रेजिंग द फंड फ्रॉम द मार्केट. नाउ दिस मर्चेंट बैंकर्स की एलिजिबिलिटी चेंज कर दी गई है. दैट मीन्स हु आर गोइंग टू बी एलिजिबिलिटी मार्केट और वी कैन से मर्चेंट बैंकर्स, तो उनकी एलिजिबिलिटी चेंज कर दी गई है, उनकी डेफिनेशन चेंज कर दी गई है. राइट. सो व्हाट दिस rules talk about? This rules talk about the merchant bankers. The purpose क्या है इसका rule का? That we are going to ensure that these merchant bankers are financially strong. इनके पास भी money muscle होना चाहिए, because they are taking a lot of risk while doing this job, and that is the reason. तो बेसिकली हम सीधा डायरेक्टली जाते हैं हमारे रेगुलेशंस पे. इट्स टॉक अबाउट दैट नाउ देयर आर टू कैटेगरीज ऑफ मर्चेंट बैंकर. द फर्स्ट वन इज ओनली हेल्पिंग इन IPO FPO राइट इश्यूज. ओके, दैट मीन्स इट इज हेल्पिंग द कंपनी इन रेजिंग द फंड्स फ्रॉम द मार्केट. द सेकेंड कैटेगरी ऑफ मर्चेंट बैंकर इज हेल्पिंग द कंपनी इन सम काइंड ऑफ कंसल्टिंग सर्विसेज. किसी ना किसी तरह की कंसल्टिंग सर्विसेज दे रहा है. ठीक है. इशू मैनेजमेंट, दैट मीन्स इट कैन एक्ट एज अ लीड मैनेजर फॉर रेजिंग द मनी. इसमें इसको परमिटेड नहीं है फॉर एनी काइंड ऑफ इशू मैनेजमेंट. अंडर राइटिंग का मतलब है आप किसी चीज की गारंटी ले रहे हैं. आप गारंटी कब लेते हैं? कि मैं आपको गारंटी देता हूं, आई गिव यू दिस गारंटी दैट दिस पर्सन विल पे यू बैक मनी. ओके, इफ आई एम टेकिंग दैट गारंटी, दैट मीन्स आई एम टेकिंग द लायबिलिटी on me that you will pay this money one day. Okay, now these kind of guarantees are also being taken by this category 1 merchant banker, right? So in this case, this underwriting services are being allowed by the category 1 merchant banker, but in case of category 2 there is a limited role but still allowed with them. Okay, there is some kind of limitation. Then scope of activity, they can do any kind of activity, merchant banking activity, and full fledged de sakte hain. And there is a limited merchant banking activity. Why? Because they can only give consulting services. Regulatory importance इनकी बहुत ज़्यादा है, because they are financially involved, the money is being involved, and then in this case there is a lower and supportive role. सिर्फ supportive role दे रहे हैं, कोई money involved नहीं है. ठीक है, सिर्फ suggestion दे रहे हैं. Then risk exposure इनका ज़्यादा है, because again money is being involved, and then risk exposure in category 2 of merchant bank is lesser. तो हम इनके role से ही समझ सकते हैं. Right? So now we are talking about the net worth requirement, that is category wise, category 1 and category 2. अब net worth maintain करने के लिए भी इनको timeline दे दी गई है कि January 2027 तक you have to maintain 25 crore of the net worth, and for category 2 they have to maintain 7.5 crore of the net worth. How net worth is being calculated? When we subtract total assets from the total liabilities, right? And the same category, that is category 1, have to maintain their net worth by 2028 at 50 crore, and then category 2 at 10 crore. Just like that, liquid net worth भी होती है एक कंपनी की, जैसे कि कैश और लिक्विड एसेट्स कितनी है, कि आज उन्हें अपनी सारी लाइबिलिटीज पे करनी पड़ जाए. टुडे दे हैव टू पे बैक ऑल देयर लाइबिलिटीज. हाउ विल दे पे दैट? ओके, सो दैट कैश, दैट liquidity of cash must be there with them. Okay, so again that is being bifurcated in two, category 1 and category 2. By 2027 they have to maintain 6.25 crore, 1.875 crore respectively, correct, category wise, and by 2028 they have to maintain 12.5 crore and 2.5 crore as per respectively category 1 and category 2. Let's just come to the more rules. It says underwriting limits क्या हो सकती हैं. So underwriting limits क्या है? That it cannot exceed 20 times of the liquid net worth. We just talk about liquid net worth, right? Suppose हाइपोथेटिकल एग्जांपल लेते हैं दैट लिक्विड नेट वर्थ इज 20 करोड़, सो 20 टाइम से ज्यादा अंडर राइटिंग नहीं होनी चाहिए, इसका मतलब है 200 करोड़ से ज्यादा अंडर राइटिंग यानी कि गारंटी नहीं ले सकते। ओके, गारंटी 200 करोड़ से ज्यादा नहीं होनी चाहिए, सो देयर इज अ पर्टिकुलर लिमिट दैट इज बीइंग aligned here, right? Again this limit, इस लिमिट को मेंटेन करने के लिए भी टाइमलाइन दी गई है। इफ यू हैव एक्सीडेड सच लिमिट यू कैन रिड्यूस इट बाय 2028 जनवरी। देन मिनिमम रेवेन्यू रिक्वायरमेंट, आपके पास अच्छी प्रॉफिटेबिलिटी भी तो होनी चाहिए। You must have enough revenue in order to deal with this risk, right? So category 1, they must have a minimum revenue of 25 crore in last 3 years. And category 2, there must be 5 crore of revenue minimum for over last 3 years. How they are going to assess it? They are going to assess the revenues by 2029. And in case there is a non-compliance with regarding to this minimum revenue, the registration of these merchant bankers will be cancelled in that case. Let's just move ahead. Mandatory NISM. We just talk about the NISM certification. So they are saying the compliance officer in that merchant banker will also require the same certification. And for the existing, the timeline is 2027 January. And for the new merchant bankers who are coming ahead, they must get these certification in within 90 days. Now there is some rules which are pertaining to governance and the personnel norms. That means there is some kind of key personnel who used to work in the merchant banking, right? Who are these personnel? The one is independent compliance officer. Independent ensures that they are ensuring unbiasedness in the companies. So in that case, they must appoint one independent compliance officer in the company or merchant banker, right? And the next one is principal officer. A principal officer is also one of the key officer in the merchant banking. They ensure, or they are the one who actually deals with the regulatory bodies. So they must have more than 5 years of experience in the financial market. So these are some of the regulations of the merchant banker. So these all regulations are very important. What else? Outsourcing. It is very important. It says no outsourcing of merchant banking activity is allowed. Outsourcing means that you are hiring some other third party in order to do these basic merchant banking activities. So SEBI says no, you cannot do any kind of outsourcing in that case. Conflict of interest. They are saying, suppose there is a merchant banker and they have already bought some kind of shares of a company for which they are supporting the IPO services. That means they are going to deal with the IPO. They are going to help these companies in order to raise money from the IPO, right? But they also have some kind of share. That means they have bought some shares of these same company, right? So that means there is some kind of interest involved of these merchant banker in this particular company. So this is going to raise a conflict of interest. So conflict of interest ho jayega. This is going to harm. Why? Because this is going to harm the small investors, right? This merchant bank can hamper or make decision in favor of this company, which is going to hamper the interest of small investors. And that is the reason they are saying, if the merchant banker having a threshold of 0.1% in the paid up capital or less than that, only then they can do the IPO services to that particular company. Otherwise, if it is more than that, they will not be allowed to manage their public issues. Simple. So now we are going to discuss the question answers. I request you all to give your answers respectively. Question number 1. Recently, the RBI has issued the final amendment direction to revise the risk weight framework for NBFC loan infrastructure projects. So what they are talking about? Which of the following correctly matches the minimum repayment threshold with the applicable risk weight? We just talked about it. Let's just see how many of you know the answer. So in this case, C is the right answer. C is the right answer. That is, if they have made 2% of the repayment, 75% would be the risk weight. If the 5% of the repayment has been done, then 50% of the risk weight. Yes. You all are correct. Question number 2, recently SEBI made it mandatory for the compliance officer for alternative investment fund. They are saying which of the following best describes alternative funds as SEBI certification requirement. तो यहाँ पर AIF की आपसे definition पूछ रहे हैं. Tell me what is the right answer in this case? What is the right answer for question number 2? Yes, B is the right answer. That is privately pooled investment vehicle as defined by the policy. Good. Question number 3, in December 2025, the SEBI notified the phased rollout of revised net worth and compliance norms for the merchant banker. Very important. It says what is the minimum net worth requirement for category 1? कैटेगरी 1 मर्चेंट बैंकर बाय जनवरी 2028 तक कैटेगरी 1 मर्चेंट बैंकर को कितना मेंटेन करना है? इट्स डी. यस, 50 crore is the right answer. So I hope you have liked the session. In case you have any kind of doubt with regarding to the session, you can comment in the comment section below. In case you are wondering where you will find this PDF, the PDF you will find in the Telegram group of our channel, and the link of the Telegram channel is in the description below. Okay, so goodbye everyone. Take care of yourself, and we will meet again on Tuesday, Thursday and Saturday at 5 p.m. Okay, goodbye everyone. Take care of yourself.